Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike. Mike, after a brief meltdown at the start of the month, how are the markets doing now?
Well, it's very interesting. As days go by, we get more information and data on what happened. It's come back. It's not back up to the all-time high, but it was a correction. And I think the real question is that start, of a topping process that's going to lead to an even bigger drop this year, or are we just going to go straight up like we did following the Brexit drop? And actually, there's a little bit of a dip before Trump won. Say most American investors are totally convinced that we're going higher, and I can say that from 7 surveys. There's a official with Ameritrade. She said that they saw a bigger net buy increase in accounts across the board that they hold from last February of 2017. So more people are actually buying stocks this month than they did 12 months ago. And on the day of the drop, there's a clearing broker called Apex, and they said that they actually had a buying surge among individual investors. And it was a mix of two groups. One, people that hold what they call robo accounts nowadays. This is where you don't have an investment advisor, and you've got basically a computer program that says buy if stocks drop or bonds drop, buy. And most Americans only invest in the U.S. stock market, and that's what most people in the United States are really doing. They have no doubt of what's happening. However, I think we can't just assume it's going to go up like that, because when you get a bear market, it's not a fun thing. And the next bear market is likely to be much different than the last two, and that would be a situation that would really devastate almost everyone in the United States, because they don't know anything else. A simple solution is just to allocate a bit of your money into gold, and that would benefit from turmoil in the bond market. But the big thing I think that will determine what that ultimate outcome of this year is, from a macro perspective, is look, the stock market is highly valued. Everybody knows that. The cyclically adjusted P/E ratio is at a reading surpassing 1929 and 1987 and 2007. Only 2000 wasn't higher, and we're at extreme high valuations. The price-to-sales ratio in S&P's at a record. Now, the argument for that, the valuations are completely justified, because we're on the cusp, the bullseye year, of an economic boom in which the country is going to have a renaissance, sort of like the 1950s. Manufacturing is going to come back. Trump's leadership abilities is going to create the boom with his tax cuts and his increase to stimulus, and therefore the market was just going to go up and up and up. And the higher rates that are being talked about on television is just a symptom of people factoring in the coming boom. So in that sense, you've got to be positioned now, and valuations, and we're going to enter a period of prosperity like you won't believe. The other argument, though, is that the stimulus cuts, although they're fun, they are increasing the deficit by $1 trillion next year and the year after, and there aren't enough people around the world to fill the gap, so the bonds are tipping into a bear market already, and eventually, that's going to hit the stock market. It's causing the dollar to pop. And this is the kind of thing you see in countries that run into a debt crisis, and in that case, we're not going back to the 1950s, and instead, the whole country's going to Atlantic City, and you go bankrupt, and it's just going to be a total mess. But I think, all that wouldn't happen for a couple of years, but what does happen with the markets over the next couple months, I think, will determine what direction we're ultimately going to go. And the stock market has bounced, but it's now just, so far as we're speaking, it's just drifting. And S&P is basically floating around the 50-day moving average at around, that's 27.28. Resistance is about 28.80. Support is the low of 25.50. That's where the 200-day moving average is. And in bull markets, the 200-day moving average acts as support, a buy point, which it is proven to do. But if we fall through that, which the bonds in the U.S. dollar already have, that would be a sign that we're tipping into a bear market. You got to buy gold, you got to raise cash and diversify. And I think what people need to do when they hear me say this is not say, oh, here's someone predicting this. It's like Peter Schiff or someone I don't like when they talk bearish and this is bad and I'm just going to tune out. Instead, what they need to do is keep their eyes open to what happens. And if that sort of situation unfolds in the coming months, adapt to it and don't just, not pay attention and just assume things are going to go up. I mean, I can tell from my own experiences, there have been times in the past, it happened to me once, where I was fully invested in something and I ran into trouble because it just dumped and I wasn't paying attention enough.
We'll have more with Mike Swanson right after this.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Welcome back. We're speaking with Mike Swanson. Mike, gold took a huge hit on Tuesday. What do you see happening in gold?
Well, I looked at that too because in 2008, gold pumps with the stock market. And I'm someone that owns gold, and I don't want to lose all my money, that I own it if it's going to crash the stock market. So I went and did a quick study. What is going on? What's influencing it? And it's not really trading in any mathematical correlation with the stock market, but with the U.S. dollar. It's actually trading opposite of the U.S. dollar at 80% correlation. And that's really what it's supposed to do. So the way I look at it is gold has resistance at 1350. It's hit it multiple times over the past 12 months, and we just had another pullback off that level as the dollar has gotten kind of oversold and looks like it's trying to put on a short-term bounce, although saying that a month ago and the bounce just lasted a week. And that's kind of what it looks to me like. We're just having a little pullback off resistance. And the thing is, as I was saying, most people are convinced that we're on the cusp of a boom. And if the opposite's the case, though, and stuff's going to tip over, gold's going to be where you want to be because the Fed will stop raising rates, they'll be dovish, and gold's what will go up. So I really think it's a necessary own from a diversification standpoint. But I see the pullback as actually a healthy thing. It did fall $20-some, but, it's still around 1,300, above 1,300. It's just consolidating, and I think it's a good buy point. Interesting fact about it is GLD, the most popular gold ETF, now has 40% institutional ownership. So the masses have fled these gold ETFs in the United States. GDX has actually shrank in the number of shares outstanding, too, from where it was 12 months ago. So the interest among the general public is just gone. I mean, for what little interest there was to begin with. And that's kind of what you want to invest in, something that no one cares about. It's like, to me, buying the U.S. stock market in 2009 or 2010. And one thing I'll add about that, too, is one of the big themes about the stock market is that the VIX blowing up and some malfunction and robot trading is what caused the drop. Interestingly enough, in 2010, there was a 10% drop where the Dow fell 1,000 points, and the same thing was stated, that trading programs malfunction, and this was the cause of it. And to show you where we are from back then in regards to sentiment, that caused an anger and outrage among individual investors. A book came out called Flash Toys that became a bestseller, and the sentiment surveys got more bearish in 2010 after that drop. And now it's the complete opposite. Nobody's angry. Nobody cares. They all just think it's going to go up. The point is how different the sentiment is in the stock market from where we were in 2010, and what people think about gold. I mean, people in the U.S., you can't talk to them about gold. You can only get them interested in Bitcoin or more U.S. stocks or ETFs like SPY.
We'll have more with Mike Swanson right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Oil still at $60 or better this time of year. Is this going to hold on, and are we going to see much higher prices in the spring?
Well, this is a real interesting question because, again, one of the themes about the bond market is why is it falling, right? I posit the possibility that it's going to fall because of the $1 trillion deficit and financing that. But on television, the theme is, again, economic boom, inflation's going to explode, so rates are going to go up, stock market's going to go up. But if you look at the oil market, it's just flatlined. And when the stock market dropped the other week, oil stocks were the worst performing sector in the entire stock market. Exxon got smashed and some of the other big caps. So, what's going on in commodities, such as the agriculture commodities, they're all on 52-week lows. They're not going up to match the rhetoric of coming inflation. And interestingly, in the oil market, the commercials, traders and hedgers, which tend to be right, there's Saudi Arabia, the people producing the oil, they've got the biggest short position now in history, surpassing the one of 2014, and there's a historic level they made in the first quarter of last year. So betting that at least they're hedging their positions. Maybe they're betting it's going to drop, but they're not bullish, and that tells me that the commodity prices as a whole, that doesn't mean they're going to crash or something, but I think they have limited upside, and that makes me question the whole narrative that, inflation's about to explode, and that's what's driving all these markets. So the oil is something to watch. I'm not saying oil is going to crash or something, but it just looks like a lot of these commodities are just going sideways.
What's happening with cyber currencies right now?
Well, that's interesting too. Is the funny thing that happened since Trump got elected isn't his fault, but when there have been times which you would think the dollar's going to go up as a safe haven, such as last August when there's these nuclear taunts back and forth between Trump and North Korea. And just now, when the stock market dumped the other week, you expect the U.S. dollar to be a safe haven, but that's not happened. And the currency that has gone up is the Chinese yuan. That's the one that's acting as a safe haven and spiking up. So it could be that we're in some, decade or generational shift in global financial markets where China is going to, in our lifetime, surpass the United States in financing the world or something. So it's funny, there's always changes going on, and it's hard to see what's happening in front of you, and that's just how life is. And then you look back 20 years later, and you're like, oh, it was so obvious, right? So I think the stories, is someone who lives in the United States, I know you live in Canada, you just, we're not in China, we don't see what's going on and how they're impacting Asia, and the U.S. has pulled out of that Trans-Pacific trade deal partnership, and a lot of these Asian countries are now just starting to work together, and so things are changing slowly, and it's just things going to be in a decade. It's going to be interesting to see.
Well, the price of copper has remained very strong. Is that a sign that the Chinese economy is booming?
Yeah, it could definitely be. And interestingly, the copper companies themselves, such as Freeport, McNamara, and Rio Tinto, they have recently announced explosive earnings, and they basically paid off all their debts, and they're announcing dividend boosts, buyback boosts, and saying in a position they're even going to be able to buy other companies up with cash. So that's how flush, financially these mining companies are. And that's a sector I think would be worth looking into and investing in.
Any other area that you're looking at right now?
Well, really, I'm investing in actually the biggest, one of the biggest trades I'm doing right now is shorting bonds, with a good portion of my account. And, I hold core positions in gold and silver and some of the mining stocks, but I actually got, right at the moment as we're speaking, 40% of my money in cash, and I'm just going to see what happens over the coming week. If market bulls are right, in fact, we're going to consolidate like we did in 2010 or 2011, and we'd have another buying opportunity. And if that doesn't happen and we just float, then I think it's time to bet against the stock market. So I'm just getting myself in a position to see what's the way and make some bets then.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. You're listening to HowStreet.com radio. Any questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.